Hello there, Hector Davil here. Let's take a quick look into the London Open Breakout Forex strategy. Alright, let's start off with the basics, shall we? As you probably know, there are a number of major trading hubs in the world, trading centers such as Sydney, Tokyo, Hong Kong, Frankfurt, London, and New York. Okay, there are 5 or 6 main hubs, main trading financial centers in the world, and out of those 6, by far the most important ones are Tokyo, London, and New York. Those are the big 3. Now, believe it or not, the world capital as far as forex trading goes is London. It's not Wall Street, but actually London. London pulls out around 30% of the entire world's trading volume. New York pulls out around 16-18%, and Tokyo between 10 and 12%. Now, due to the planet's natural rotation, the first financial center to open up for the day is Tokyo. Then 6-7 hours later we have London opening up, and finally the last market of the day is New York. Now, as you can see, there is a massive difference between the Tokyo trading volume and the London trading volume, and here is where it gets interesting. As Tokyo is closing down for the day, London is waking up. So if this is the Tokyo session time span, this is London and this is New York, we can clearly see how Tokyo and London overlap for a brief period of time, which is 1 hour to be exact. Now please remember that Tokyo pulls out only at 12% of the world's global trading volume, whereas London pulls out a full 30% by itself. Now that means that within that 1 hour overlap period, trading volume explodes in the market by a factor of 3. And that trading volume explosion, my friend, is what the London Open Breakout is all about. Alright, now let's cover the key points, the core elements of the London Open Breakout strategy. First of all, it's an intraday trading system. That means that you are going to take your entries and your exits within the trading session. Alright, this is for short-term traders who like to trade on a daily basis. Secondly, this is a momentum-filled strategy. Remember that volume explosion as Tokyo gives way to London? Well, right there and right then is where we are going to be searching for our trading opportunities, so we can jump into our trades riding that extra momentum, that extra volatility that we see again at that precise moment. So, we are going to be taking those early morning trades, riding those momentum swings as the London market opens up, so our profit taking levels are usually hit very early in the morning. Therefore, we'll have the rest of our day completely free, so we can walk away from our trading computers. Now, since this is again a momentum strategy, we are going to use tight stop losses in order to benefit from a high risk reward ratio. On average, the distance between our entry level and our profit taking levels is going to be much larger than the distance between our entry and our stop loss level. On average, we are going to shoot for somewhere in between 50 and 100 pips per individual position. Obviously, that depends on every single trade, you know, every single setup is different. But again, on average, you can expect 50, 60, 80, up to 100 pip per trade. Now, here is something that's rather important. Just because we are going to trade an intraday system, that doesn't mean that we are going to take multiple trades every single day. In fact, the London Open Breakout strategy seeks to trade just one single position per trading session. Again, one trade per day. At the beginning of the day, we are going to be analyzing the different setups, and we are going to cherry pick the very best looking setup, the very best looking trading opportunity of the day, and we are going to focus exclusively on that. Now, just because, again, we are trading an intraday system, it doesn't mean that we should take trades every single day of the week. In fact, on average, the London Open Breakout will give you three valid trading opportunities per day. I will teach you how to recognize those trading days in which the absolute best trading decision you can possibly take is to simply stay out of the market for the rest of the day. So again, on average, you can look forward taking 3 trades per week. Now, all along the video, we've been talking about that extra market acceleration, that extra market momentum we usually see as the Tokyo market gives way to the London market, right? Well, let me now show you what that market acceleration actually looks like on a real Forex chart, on a live Forex chart. This is current market price ticking live as I record this video. Anyway, we are looking into the sterling pound against the American dollar, 1 hour time frame. Each of these boxes here represent 24 hours worth of price action, okay? This is basically each of these boxes represent a full day in the market. This is, by the way, my daily box indicator, which is one of the custom coded indicators that you will be able to download from the members area. Now, this white line, vertical white line, represents the opening of the London market. So, this is what had happened throughout the Tokyo session, and from this moment on is what's happening through the London session. The New York session, by the way, has opened somewhere in there, alright? But we are only going to be interested in the transition from from Tokyo into London. Anyway, that's where a London market opens up, and do you see price action as the London market kicked in? Do you see that long bar, that fast moving bar? That's the price acceleration I was talking about before. Okay, let me now show you what happened yesterday. This is yesterday's price action, by the way. Alright, well, that's again, that white line represents the beginning of the London session, and as you can see, within 1, 2, 3 hours, in the first 3 hours of the London market, we had a massive price acceleration, in this case to the downside. Beautiful down move, all the way from up here to, that's 50 pips, that's another 50 pips, and another 50 pips, a little bit more, so around 160 pips within the first 3 hours of the London market. Beautiful down move, beautiful momentum swing there. Now, let's scroll back a little bit more. Yet another daily box representing another 24 hours worth of price action, meaning the day before yesterday, the London market again opened up as per the white line, and well, there it goes. Nice move in the first 2 hours of the London session. That's 50 pips there, another 50 pips, so that's around 100 pip move within 2 hours. Do you see now why I said before that we are going to be shooting for quick profits early in the morning as the London market kicks off? So we can indeed profit from these acceleration momentum swings as soon as possible early in the morning, so we can pocket our pips and have the rest of our day for ourselves. And well, we can scroll back in time, or as far back in time as we wish. Yet another day, okay, another 24 hours worth of price action, another London market opening in there, and as you can see, as the London volume kicks in, another price acceleration. This time around, from here to here, and around 80-85 pips more or less in the course of 1, 2, 3 hours, 3 hourly bars. So 85 pips, 3 hours, not too bad, not too bad. Like I say, this is something that happens on a daily basis. As you can see, these market momentum, market swings, is not something that happens rarely. Actually, it's almost a daily thing, and that's exactly why I want to teach you this technique, because it happens, and it happens often, and it gives out fantastic acceleration moves you can profit from.